and large, when you're paying 70 times earnings for anything, you're expecting a very significant amount of upside and very fast growth. So the stock was very clearly priced for perfection. And this is really due to the phenomena that was the move last quarter. So as most people know, SoftBank actually still owns 90% of ARM, leaving only 10% of the float to be publicly traded. And with a couple of other sticky shareholders, it's even less than that. So when they posted a beat last quarter, really due to scarcity value, just the fact that there's not so much AI large cap exposure out there, majority retail really drove that stock way higher than it should have been to an astronomical valuation multiple just to get the exposure. Now, coming into this print, it was time for the rubber to really meet the road. And these numbers needed to be perfect for them to be able to justify that valuation. We like the Q4 numbers driven by the V9 architecture market share gains. The business is definitely doing well. Q1 guidance was fine also. But then for them to guide below the street, slightly below consensus at the midpoint for the full year 2025, the valuation is just not forgiving for that. But by and large, that might probably is somewhat of a conservative guide. So if they're able to come out next quarter and raise that and ultimately beat it, that would be good for the stock later on. But for right now, we expect this profit taking to commence.